somebody who was super tech savvy like myself walked into an industry that was using fax machines still. And I was just blown away with how backwards deploy an app on the Apple App Store when I was 19. And, back then they didn't get paid that well. I think they used to get paid around 75 grand a year. In a business that I sort of went across to help start, I was employee number one. As we tried to scale that business, we ran into some issues trying to scale that. So that was where I started building what is now Loan Options AI.
Welcome to the DevReady podcast, where we're helping non-techs build great tech. Today, fortunate enough to be joined by Julian, the CEO of Loan Options.ai. Been in news, seen you around a little bit on socials and doing wonderful things in terms of the space of a growing startup. Love to just talk through the history of what you've been up to at Loan Options and how it's all come together. Julian, thank you for joining us.
Thank you so much for having me. Really appreciate it.
For everyone out there, it's always great to get a bit of a history of who Julian is and how you sort of ended up in a startup business and have grown that over the journey. So tell us a bit about you, your background, Julian.
Yeah, so when I finished school, I was studying web and app development, and so that's what I wanted to do. Back then, they didn't really call them software engineers; they called them software developers, and where'd you study? Well, I started studying at a college, and then I ended up dropping the course. That's kind of the next part of the story. But I started studying web and app development, and then I would do a lot of stuff in my own time. I learned to build and deploy an app on the Apple App Store when I was 19, and but back then they didn't get paid that well. I think they used to get paid around 75 grand a year, and while
it was a low-paying career at the time, wasn't it? It was not really.
Yeah, we're talking 15 plus years ago, right? So I think like what happened was I needed to work, I come from very humble beginnings. I needed to work full time to help support my mom and, my brothers and sisters. And so I got a job in a finance brokerage. My cousin worked at a finance company. She said, "Oh, look, I could probably get you a job." I was like, "Yeah, cool. This would be great while I'm studying." I got a job and I just walked in, somebody who was super tech savvy like myself, walked into an industry that was using fax machines still. And I was just blown away with how backwards.
There's still some industries out there that use them. We work a bit in pharmacy and they still use those things. Yeah, it's fascinating.
But, so I saw, a huge amount of opportunity there. And I also looked at how much money they were making, successful finance brokers and stuff. I was like, wow, you can make a career out of this. Can be a lot more lucrative than a software developer. And so I ended up getting to a point where I dropped out of the college program and I became a full-time broker. I worked my way up job by job, position by position, earned everything the hard way, and ended up getting to a point where I was a senior broker, then a group manager, then a state manager, then a general manager.
Just worked your way up through the traps. Yeah, of course.
Yeah, and then in a business that I sort of went across to help start, I was employee number one. As we tried to scale that business, we ran into some issues trying to scale that. So that was where I started building what is now Loan Options AI. We were trying to find a better way to match a client using their specific credit information, match them with the right lender from over 40 or 50 lenders at the time. It became like an infinitely more difficult Rubik's Cube. But I got very good at it. I had the ability to learn and retain a lot of information about lender policy. It's just the way my brain works. And people would come to me consistently for advice, like, "Hey, I've got this complex scenario. Where do you think it would go?" My brain could compute it and then, basically give them the correct answer. But obviously that's not a very scalable solution relying on me. So
it isn't, unfortunately. Yeah, humans are not very scalable. That's for sure.
So I decided to then create, I said, well, if my monkey brain can do this, then I can just write down all the logic and reasoning that I'm using to come to these conclusions. And I started in a spreadsheet.
Good, fair point.
That's kind of the MVP, if you want to call it, was a spreadsheet.
Anything's an MVP. Yeah. A spreadsheet can be an MVP. That's a place that many people begin, especially like a knowledge-based worker, right? But with a bit of technology background that you've been exposed to. So that probably got you to where you are.
Yeah. And essentially, I started writing formulas, and formulas weren't enough by themselves. So I started learning VBA code, which was horrible. And so, I ended up creating this quite sophisticated spreadsheet. I still have it to this day.
Yeah.
It'll be in a museum, hopefully one day, who knows? But, I say that tongue in cheek, just in case people don't know that I'm joking about that. But, it's certainly, then later, a couple of years later, after testing it and getting it to work, COVID came around, and the parent company of that business, I was a minority shareholder. There was a public listed company that owned the majority of it. They wanted to hibernate the business during COVID. That was, what a lot of companies were doing to just sort of appease shareholders. And
it's a little bit slow down, pull back on expenses.
Public listed companies were doing some weird stuff there. Anything that was non-core to their business, they were just kind of stepping aside or divesting, or, and so I said, okay, well, if you're going to hibernate the company, remove my non-compete, I'll give back my shares, we can go our separate ways. I did that. And that's where Loan Options was born. So at the time, they were allowing people to take out a total of $20,000 from their super. I took out 2 lots of $10,000 from my super. I also, took money out of my children's bank account that was the seed capital to start it. So
you need something, who's got to figure out a way. Yeah, brilliant. Okay.
Started the business. We got it off the ground, the first full month we started, getting break even and profitable. And that was because I'd been
That's quite rare. It's because the background in industry, I'd imagine. You've been there. Yeah, that's quite rare in early stage.
Yeah, it was rare. But, at that time I'd been in finance broking for about 9 years, and now I'm 15 years in, it was probably 9 to 10 years. So I'm 15 years in now. So, had a network, knew how to acquire customers, knew how to market, knew how to do all of that stuff. So, so it wasn't as hard as maybe someone starting, with a greenfield idea
from complete scratch. Yeah, no, fair point.
We build the version 1. Let's call it version 1 because the spreadsheet was the MVP. We build version 1. We go live with it in August 2021. August 2020. My bad. August 2020. We go live with it August 2020. We grow. Before we know it, we're doing, we're 3 people doing more than 75 loans before the end of that calendar year.
It's quite a bit, isn't it?
Yeah. And then, we hired more people. I got off the tools and stopped writing loans and started focusing on building partnerships and advancing the technology. We hired some software engineers. They built out, numerous technology. They made the existing technology better. We made a good call at the time to build on, the React frameworks. I think React and Next.js, had some good scalable architectures, easy developer.
Yeah, React, even Angular at the time, that was sort of there. Angular died off, but and you did Next.js, sort of, Angular.
Next.js, it was sort of the next kind of versions of it. And, so picking the right stack was really, really important. And, we did make mistakes in the very first version. And
you're always going to. Have you rebuilt over the time, or have you just been incrementally developing the application?
The first version basically got scrapped. And then every version after that was on a React framework. So it wasn't a total, rebuild. But this is the thing that a lot of people, they make mistakes. They get caught because, it's sort of like, you don't know exactly where that product is going to go, so you sort of have an idea for it and you think, where it's going.
You got an idea. Yeah, you're right. Yeah, you got it. But it can pivot quickly, can't it?
It certainly can. And, so we, the first version went live in August 2020. This version 2, which was on React, was a game changer and a bit of a disruptor when we launched it in February 2022. We also turned it into a white label platform. So we were able to build partnerships that were like what we were white labeling our technology. And,
okay, so basically SaaSing your technology pretty much.
Well, it wasn't SaaS at that point. It has become SaaS, but it wasn't SaaS at that point. It was more like a B to B to C model. So we were still helping.
So you handed to other brokers.
We were still facilitating the loan. We were still taking care of the client, the end client, but we almost have these like decentralized funnels that were funneling the clients from different partnerships into our, home base, if you will, or our HQ.
Yeah, okay.
Our finance brokers were responsible for, getting the loan settled with the best lender from, now over 90 different lenders that we have on our panel. And we would get on success commission from the lender. So if we didn't help the client, the service cost the client nothing. So it was a really great model. I think customers really resonated with the technology because we were just making it so easy and so transparent. It went from a traditional broker model where a client would apply for a loan, not hear back for days, and then not have any transparency on how a particular lender was selected, to allowing the client to apply for a loan in less than 5 minutes. And in real time, as they're putting in their information, they can see exactly which lenders are applicable to their certain credit circumstances. Version 3 of the software launched in December 2023. And that was a real massive moment for the business, because we went from, the old school way of doing finance applications, and anyone who's done a loan application or a finance application before knows the standard flow. It's like, give me all of your information. There's all these questions.
Yeah, it's the collection piece. And that's the biggest sticky point for most people, right? Gathering the information in the space.
Yeah. And then at the end of all of typing in all of that information manually, you then have to supply the supporting documents. And so what is the point of collecting or making the client type in all of that if you're just going to use the documents to verify the information anyway?
That's true.
So we actually flipped the process on its head. We said, why are we asking the client for all this information if we can get it? For example, all of their license number, date of birth, all that stuff, it comes from the license. So we've got a whole bunch of technology, proprietary tech internally to, one was a series of OCR technologies. Another was autocomplete contextual engine. And so that was like an intelligence layer where after we've read and extracted the data from the license, as an example, we knew exactly which fields to pre-fill. And, it had that additional context of what the document was and where it needs to, where we need to extract the data and pre-fill it. So the process ended up looking like this. Step 1 for the application, upload your ID. Step 2, connect your bank account. And step 3, upload a payslip. And so from the ID, we would get all of the personal details, or pretty much everything we would need. From the bank statements, we would get all of the client's income and expenses. From the payslip, we would get all of their employers' information and their, verify their income. We then ran checks in the background, depending on, let's say credit check, a soft check, so there was no impact to the client's credit score. And we could pre-fill their liabilities. So any loans and credit cards that they had, they would be pre-filled for the client. And so 80% of it was pre-filled. The remaining 20% was things like their assets. So like, what assets do they own? How many cars do they own? What properties do they own, if any? How much super do they have? That kind of thing. And then the individual questions that we needed to ask were things about things that we couldn't figure out or deduce from their documents. Like
just from the documentation.
What's their marital status? How many dependents do they have? What's their citizenship status? And so this is where the business truly exploded. We had multiple years of triple digit growth after that. And we were already on a pretty aggressive trajectory. And we started to get a lot of inquiry through 2024, 2020 about, potentially people using it as a SaaS product. And so we spent through the middle of 2024, instead of building version 4 of the asset finance technology that we built, we decided to turn the existing one into a SaaS solution. And we had a lot of interest from mortgage brokers wanting to use the tech, but they wanted to see if we could build the residential lending version of that as well. So we spent the second half of 2024 and the first half of 2025 building and launching that. And so now it's a fully fledged SaaS product. We have the original channels and revenue models, but we also have a new revenue model, which is the B2B and enterprise SaaS. And we've gone live with some of the country's biggest aggregators, some household names, loan market groups, and one of them. We've just signed a partnership and are about to go live with Lendy Group, which is Aussie Home Loans, and Lendy.
It's huge.
Really successful.
Where you're at.
Thank you. But
it's brilliant.
So that's kind of that's the background, and that's kind of the transition.
It's an interesting story because you didn't set out to build a SaaS product, did you?
No.
Sometimes it's set out to solve a problem, and I think that really says a lot of the way you've approached it, right? So, problem was it was all backwards. How do we make it a bit more streamlined for people to come on board and actually give over documentation, fill it out for them? That's one of the biggest issues that I've seen when I've brought property. It's just too much documentation. You have to go find it all, fill out everything. It's a pain in the ass, and no one enjoys it. So if you can improve that, which you have improved the process, then it opens up different opportunities. In terms of technically, you started as a mortgage broking firm, correct me if I'm wrong.
We don't do mortgages. We do everything else. So car loans, personal loans, business loans, everything except for property.
Yes, it's all loans, no mortgages. Why not property?
Well, most of our partnerships that we created were from mortgage brokers referring us car loans and stuff. And so we didn't want to tread on their toes. It didn't make sense.
That's what I was going to ask that question. How does it work if you're treading? So you weren't there.
Yeah. So we've done a very good job to stay in our lane and be the very best at one type of lending, which is like non-property lending. And we do consumer and commercial lending, but it is specifically on everything non-property related. So we're very good at that. Our tech has managed to take our fastest loan from start to finish. So from first inquiry to money in the client's account, it did it in 36 minutes. Obviously there's a human team behind that, but that's incredible. Like, to think that a client can, decide, and this is a real story it was a registered nurse, went on a lunch break, decided she needed to, I can't remember what it was, debt consolidation, decided she needed to consolidate some debt or do some home improvements or whatever. She applies for a loan. 36 minutes later, she has the money in her account. So before her lunch break is finished, she has the money in her account. And so that to me has always been like what we're striving towards. Our vision from the very first day we started the business, and before it was a business, was to make applying for a loan as fast, easy, and transparent as checking out in an e-commerce store. So in other words, we wanted to be like the Shopify of lending. We wanted to build an experience that people were blown away with. Like, it's so easy to use a Shopify checkout. It's super easy.
Just quick and getting it out. You do home loans now? Is that correct?
No, we still don't do home loans. We do have a home loan platform, but that's a SaaS product. That's not we don't.
Is that where it all goes? Yeah, because I was looking into it. I didn't realize that just has piece. So, okay. So that's how you don't tread across it. And then from a brokerage perspective, you've provided the technology, and then you're going up working with mortgage brokers that way. Got it. Okay.
Yeah, and believe it or not, a lot of people just think a broker is a broker, but there's a lot of specialist areas of finance broking, and the best way I can explain it is like, we're an asset finance broker. We have over 90 banks and lenders that are on our panel. A residential mortgage broker might have another 30 or 40. And so there's no way that you can be a specialist across, all those different product types. There's no way. There's also different regulations between mortgage brokers and asset finance brokers. And so, essentially what ends up happening is you end up with these two different streams. You're either a specialist in asset or you're a specialist in residential. It's extremely hard, if not borderline impossible, to be a specialist on both. So if you go to a broker and they say, yeah, we do both, and, I can almost guarantee that it's not the best. You got to pick one. Like, to be the best at resi or be the best at asset, you can't be the best at both. It's just the way that the industry is structured, and the different lending policies and different lender relationships that you can have with certain aggregators. It's difficult to sort of explain unless you kind of see the inner workings of the industry. But we've decided we want to be the best in the country, and we're also in New Zealand now as well. We want to be the best in ANZ, if you want to call it that, across, asset lending or non-property lending. So.
Okay. And then touching in a bit of insurance too over the time from what I've seen.
Yeah, mostly through partnerships. So, there's some embedded insurance partnerships that we have in there with Huddle and Upcover. And, the idea there is to just, provide additional value to our clients. We do have a keen eye on, we are watching the insurance industry very closely. Like, at some point, building an insurance marketplace that does things as fast, easy, transparently, the way that we do loans, that's something that is of keen interest. I will explain why. So some people might go, oh, well, it sounds like what you do is a little bit like a compare the market style for loans. Compare the market and Finder and CanStar and these sorts of, comparison sites. They accept them. Their monetization model is actually accepting money from lenders and banks for them to prioritize or increase the visibility of a certain loan product. We don't accept money from lenders or banks.
Yes, they're still promoting, aren't they?
They're still promoting.
There's a
That's right.
promotion
And
piece.
they also don't
Yeah.
handhold the client. They just send them offsite. They just go, oh yeah, click here to go to the whatever loan product or whatever bank website it is, and the client's got to fend for themselves. In a comparison site scenario, that the client would need to apply for a loan. They find out they're not eligible for that really low rate that was sort of like a bait and switch style. They get an inquiry on their credit file for because they applied for a loan. It lowers their credit score. Then they realize they're not eligible. So they come back and pick the second one on the list. They go through the process all over again, have to provide all their info again, all their documents again. Then they get knocked back again. And now they've lowered their credit score further. Whereas with us, we don't accept any money from lenders to change the ranking of their product. It's purely customer centric, customer focused.
Based on the customer's input.
And they only have to apply
brilliant.
once. And all of their information is, stored in securely. And once we decide which lender is suitable, their information gets sent from our team to that lender, and without any footprint on their client's credit file at all. So it's like one application form, 90 lenders.
Pre-qualifying, you're checking against all their T's and C's and and then you're given the best option, then applying.
Yeah, that's right.
Technically. Yeah, okay. All right, that's the difference here. Makes a lot of sense. You mentioned partnership quite a bit. Sounds like it's a big part of your business. A lot of people build technology improvement, but go direct to consumer. Let's talk about partnerships and how that's helped you grow and scale the business a little bit, because I know you've touched on it a little bit. Where's it all began for you? Because I know you're working obviously with other providers to provide the loans themselves, so you're not directly on the book loaning out money.
Yeah, that's right.
So from a partnership perspective, what has that done for your business? How have you thought about partnerships in terms of scaling?
Well, I'll give you the story of why we ended up with this model. So when I first started this business, I came from a business that was purely B2B referral partnerships, and it was really good conversion metrics. So like really high quality applications that were coming through. I guess the trouble with referral partnerships is they're extremely hard to scale. And, you got to do a lot of outreach, a lot of door knocking. There's a lot of incumbents.
Yeah. Build trust, relationship. It takes time.
It does. Yes. And so I had to start again. And so, remember, I left that business to start Loan Options. And so the fastest way for me that I thought to grow was just to go direct B2C and build out marketing campaigns. And we did that. And the good thing about sort of paid advertising is much easier to scale than referral partnerships, and so it could give us that sort of the lead hit or the inquiry flow very early in the business's journey, which is great. But at a certain point, we realized like the conversion metrics were very poor comparatively to referral partnerships, and so we started building referral partnerships and doing the paid thing simultaneously. And then I was like, surely there's a better way to do this. And so one of the reasons when we launched version 2, which was in February 2022, one of the things that we wanted to build it as a white label is because I was like, there must be a hybrid between these two. And this is where we ended up with this partnerships model, because we could get the scale and the ability, we'll get the scale and the lead volume of like a B2C style, like paid media marketing, but without the ad spend. And we would also be able to leverage the credibility of the other brand. So the trust that particular brand that we're partnering with has with their client base gets passed on, because it's their colors, their logo, their branding. And then we've got a team sitting behind that's like doing, offering a great service. And, we've got 1,100 5-star reviews, a perfect 5-star rating. So you do have to deliver, but that was kind of the best of both worlds. We got a blend of, yes, the conversion rate wasn't as high as like an old school referral, warm lead referral, but it wasn't far off that. The volume and the scalability of that was much higher. So we would start doing partnerships with any particular company that has a high traffic to their website and stuff, and they could they could position us at the right place at the right time, our widget, our technology, the right place at the right time that would cause them to apply for a loan. So it could be right on a car listing, on an automotive listing website. It could be.
Ah, get it now. It took me a while to figure out what you're doing. Yeah, so positioning on websites or ads with other brands. Yeah, okay. Rather than just paid Facebook and social media ads type models.
Yeah, and that ended up being far more successful for us. And so, we grew to over 2,000 partnerships now. About 1,000 of them are mortgage brokers, and the rest are, automotive partnerships. I've got a partnership with Gumtree, partnership with bike sales, boat sales, that kind of thing. So there's different things that we do as a company. That's just some parts of it. We've got partnerships with other companies that do want to embed finance in their journey. So one of them is like a solar CRM. So they're a global business, and so whenever somebody's doing a quote for solar panels on someone's roof, they send them a proposal with their software, and inside that proposal they can choose, the solar fitter can choose to have our widget turned on, and it will allow the client to click a button and apply for a loan to get the funds for that particular solar proposal.
Based on the prop. Yeah, there's a bit going on in that space. Have you made much traction in that, to call it embedded sort of finance into other platforms? How have you seen that? You talked about Stripe of checkout. That's the Afterpays of the world, but in a different world that's bigger from a proposal from a solar perspective. How much sort of traction have you had in that world?
I mean, most of our traction is in that space, that sort of embedded finance. Yeah. So most of our traction is in that. We obviously still have a decent B2C channel, but it gets dwarfed by the B2B2C or the embedded finance channel. And so from my point of view, that's an area we want to continue to grow. We're talking to, new companies literally every single day about, how we can embed that. We've just finished building a Shopify plugin. So now any Shopify site that's selling high ticket items, we've got one that's like a 4x4 accessories and off-road accessories company, and
there's thousands of dollars expenses. Yeah, of course. Yeah.
And tens of thousands of dollars for big toolbox kits and stuff. And so some people just don't have the funds to pay all of that upfront, or maybe it's a business purchase. And why would you spend your cash? Just interest is tax deductible, pay it monthly, interest is tax deductible, away you go. Yeah, if you make it easy for people, they will use it,
Oh, that's the Afterpay is a great example, but obviously that's smaller lens or brackets. But yeah, going to a bit bigger. So I'm seeing a little bit of that in the embedded finance space. Just curious to how that's going for you. It sounds like it's going quite well. So yeah, that's a fascinating one. You mentioned at the beginning, and it's quite interesting. If you look back from where you are in 2026 to when you began, how far off the trajectory of where you're going do you think you are? Because it's always evolved, and it always does. Just want to give a bit of a insight to people out there. If we've got a concept, how much has it changed over time? Model and technology, because both will evolve.
I think if you asked me on the first day of me walking into the first day of the company, I think if you told me, that we would be where we are today, I would be very surprised and I would be ecstatic. I think if you told me probably halfway, 2.5 years in, that we would be where we are today, I would be shocked in the opposite direction. And the reason I say that is because things often do move much slower, especially at the big end of town when you're trying to do big partnerships and stuff like that. One particular partnership took us over 2 years to get across the line.
It's not uncommon. Large scale deals take ages.
So,
they do.
So yeah, it's I would have thought that we would be further along. It doesn't mean, I'm still not happy with where we're at. It's obviously we've exceeded, any expectations that I had for the business for sure. But, such is the nature of business. Like when you're riding the wave of momentum and things are just happening effortlessly, you kind of start thinking 10 times bigger, and you sort of start resetting your expectations and setting the bar higher.
Yeah, we can get a bit carried away, push the bar very high, and then the reality hits home sometimes.
But look, here's the thing, we've had nothing but adversity, just in terms of our sector specifically. Everything from 2018 to 2020 was sort of Royal Commission and the fallout of Royal Commission. So some regulatory issues. 2020 was COVID. 2021 was COVID again, plus supply chain issues with stock. And so we pivoted the business. We were doing a lot of cars and a lot of trucks and a lot of that stuff, equipment. And when supplies started drying up, we pivoted the business into unsecured lending. So unsecured personal loans, unsecured business loans, because we didn't have to wait for the stock. And so at one point we had like,
Okay.
I don't know what it was.
Just cash increases the risk, obviously, but you're not holding the risk from a loan perspective.
No,
are
we're
you?
not. But we only get paid when the loan settles. So if when we had hundreds and hundreds of approvals just sitting there waiting for cars to arrive from boats and stuff. And so we couldn't bank money. And we were like, like, what are we going to do? So we started going for like the quick turnaround, cash, quick return on cash stuff. And then we became like accidentally one of the biggest personal loan providers in the country. So it's like you build a good solution, you kind of think it's going to go one direction. You end up finding out that there's actually, a big market for it, just slightly left of center, and you kind of pursue that, you double down. And so, it is, the vision hasn't changed. The mission hasn't changed. A lot of people go, oh, it sounds like you do a few different things. But we don't. We just do one thing, which is build, the best possible technology to make it easy for a client to apply for a loan. That's it. That's what we do. We just monetize it in different ways. So we could monetize it through our own website, and then we can monetize it and direct marketing campaigns. Then we can monetize it through embedded finance and white label partnerships. And then we can monetize it through SaaS. That's a SaaS model. So we've built a great product, and, I'm really proud of that. There's more I would like to do with it. I would have thought the technology would be further along.
Well, it never ends, does it? It just never stops in terms of where you want to go. What do you see yourself in 10 years from now, Julian? Looking back, what do you imagine? What's that longer term vision for you from where you are today, next 10 years? Where do you want to be? You mentioned you're going into NZ now. What's the bigger vision?
We will enter many more markets in the next 10 years. We will enter, maybe one or two more verticals. So we want to be very deep, not very wide. So, one or two more verticals, that's it. But yeah, we want to globally expand. We've got some plans to launch in the US in the next 24 months, and some other markets, UK, UAE, Southeast Asia. Our product has appeal in those markets. We've done quite a lot of DD, and I spent some time in those markets last year doing some research. And but yeah, just in terms of how we want to be seen, it is just like, the equivalent of the Shopify of the lending industry. We want to be the infrastructure that people build lending business on top of, our platforms and our services. And so, I think if we in the next 10 years, if we've done that, I would say that we've achieved our goals.
It's a big picture goal. No, brilliant, Julian. Thank you for coming on DevReady podcast. Gives us a bit of light of a growing business that started out in one direction, but still treading along that vision, right? Let's make loans easy and accessible. That's really where you're driving towards, right? And that technology supports that. It's been interesting what you discussed around how you've shifted the way the whole process works. Sometimes, we do things backwards and we just do things because that's the way they've always been done. Just having some insight as to what could change in a process to make it easier for everyone. What are you seeing, just last thing, what are you seeing around the large language model, LLM changes, OCRing on a technology stack? What impact has that made for you guys? What has it enabled you to do internally?
Look, I think it's definitely enabled us to develop prototypes much faster and test things. There's still a large percentage of the code that gets spit out that needs a lot of oversight, both from a security and from a quality standpoint, even if you're using the best models on Claude Code and stuff. But, I think it's getting better, and, it's enabling us to trial and test new things before we go and commit, roadmap and a whole roadmap towards a project.
You could just do some testing and prototyping quickly. It's just not, you're not planning for weeks or whatever it might be.
It has condensed the development cycle. Yeah. We can get more done. Has made them, probably upwards of 30% more efficient. So yeah, I'm definitely seeing that. But I think to your point about when you're building a product, and looking at traditional ways of doing things, just before we wrap up, Henry Ford's quote about if I asked people what they wanted, they would say faster horses. that's what our industry was building. Our industry was building slightly better, slightly more user-friendly applications that were just doing the same thing. And we said, no, we want to build the car. And so we built the Ferrari, and, made it so that a finance application wasn't, 30 minutes, an hour, frustrating process, clunky. We made it mobile friendly, and we made it so that they just need to do 3 easy steps. And, we pre-complete and pre-populate over 80% of their stuff. So yeah.
They're huge, man. No, that's brilliant. Yeah, in terms of the mobile friendly, you're shifting with the market, what people want. Everyone's on these devices in your market, they're all on them. So yeah, having a desktop friendly thing probably doesn't make any sense these days. Yeah, brilliant, Julian. No, good luck with everything. It's going quite well from what I've seen and heard, and seen you all over the news and all over the place. So yeah, congrats on the achievements to date. And business will shift and pivot, like you said, and something might change next week, and then we have to adjust. And it's just the reality of day-to-day business, really.
Yeah, amazing. Thank you for having me. Appreciate it, Andrew.
Thank you, Julian. Appreciate you coming on.